I've been trading for 14 years. If you don't want to learn it the hard way and lose tons of money, this is the video for you. First trading advice I have for you, have a proper trading plan. Because the moment you start trading live, lots of things are going to happen. You trade because you're bored, you trade because you're scared of missing out. You would TP the moment you see a little bit of profits, then cut losses or never cut loss at all because you don't want to experience a losing trade. You don't want to admit that you're wrong, so you TP early, cut losses late. The more you restrict yourself, put rules, hard set rules, the more freedom you would achieve, the less stress you would have. You would think that having no plan be like, wow, so much freedom. But guess what? The stress from losing money, from being inconsistent, is going to make you more stressful in overall. And with that, I recommend you, this is not sponsored, aromatherapy balm for daily stress reduction. Now, ever since I won several trading competitions and the Singapore nationwide trading competition where I ranked number 1, people told me to start teaching. That's how I got into teaching trading, because people told me to start classes. So I've been teaching for more than 10 years. So there are a lot of trading gurus out there, right? A lot of information when you Google online now with ChatGPT and AI and all that. The only problem nowadays is not lack of information, it is information overload. So the fastest way to master trading, if you understand how a human brain learns better, you know that reading is the least effective way of learning something, especially when you read passively and don't highlight and you don't write anything, okay? The best way our human brains learn something is by doing the actual thing. Out of all the options, reading books, reading articles, okay? The fastest way for you to learn is by back testing and journaling. Add that with trading, doing the actual thing itself. If you don't have money, you can start with demo trading. A lot of the top traders that I know, they always say that I'm a back tester first, trader second. And then some people even say, I'm a back tester first, risk manager second, trader third. And because I've traveled all around Asia to speak in various different conferences, Thailand, Vietnam, Malaysia, I've met different types of traders. One thing I realized about beginner traders is that they are a trader first, risk manager second, then back testing is like optional to them. Never trade a strategy without back testing or forward testing it. Go back in time and then test out your trading strategy to see under what market conditions does it work, under what market conditions does it not work. Then Karen, how many trades do I test? Minimum 50. No arguments, no justifications. Then how long should I trade demo before I go live? There's no hard and fast rule, but you can follow this guideline. 3 times 2x. Double your capital 3 times in a row before you go live. Now the next trading advice. Are you an indicator hoarder? You watch a lot of documentaries of people being hoarders, right? That's a major issue. Are you an indicator hoarder? You realize that when you become more experienced, the less clutter you have on your chart, the more profitable you become. So in my first year, I always thought that the more indicators I put in, the better, right? The more confirmation there is, the better it is. Like, I want to make sure that MACD confirms, RSI confirms, CCI, Bollinger Bands, trend line, support resistance, Fibonacci, everything has to confirm. Then all the time frames have to be in line before I make a trade. Beginners, you can start with price action and then add just a basic moving average. Then as you become more experienced, then you add 1 or 2 more indicators. Now the next trading advice. You also learn this the hard way eventually, okay? Now a lot of beginners, I realized that they like to trade in a bubble, in their little bubble. So if they trade euro dollar, okay, euro dollar, then they would just look at euro dollar and then ignore everything else. Now it's good to ignore market noise and news and all that, but because nowadays markets, they are interconnected to each other. When one market goes up, that specific market that's correlated, positively correlated to it, is going to go up as well. Because if you watch my videos, there's this thing called risk off, risk on markets. Okay, when you study finance, I studied finance back in school. In my second year, my professor keep telling me this: understand risk on and risk off. This applies to both short-term and long-term traders, especially for long-term traders. Okay, now even if you are a short-term trader, you need to understand what are the high-impact events coming up, because for the top day traders that I know, they would avoid trading 1 to 2 hours before a high-impact event, avoid trading 1 hour after the high-impact event, so that they can allow things to settle down. The mistake that beginner traders make is that they trade any currency pair they like, regardless of the liquidity, the market behavior, the correlation of that currency with other markets, any stock they like. So if you want to increase the probability of your trade, learn inter-market analysis as well as sentiment analysis. Next trading advice, if you want to remove or decrease the emotions that you experience in live trading, okay, automation over manual. Now I'm not telling you to go all algo trading, robot trading, but you need to automate things as much as possible. So let's say if you don't have time, you know you don't have time to monitor the charts, but you know that you want to enter at this price. So you gotta preset your orders, preset your limit order, preset your TP target, preset your stop loss, and let the markets do its thing, so that your trading is semi-automated and you wouldn't do stupid things right in the middle of the trading session. And because for me personally, I know that if I stare at the charts every tick and then I enter while the charts are still ticking while I'm staring at it, I know that I'm going to enter into a bad trade. Okay, that's why a lot of times I would prefer to use limit orders. Next trading advice. This one, a lot of people will learn this the hard way before they appreciate this. You gotta understand that risk over profits. Risk is more important than profits. Now, I'm not telling you to risk your whole entire account. It's the mindset shift. The top traders that I know, okay, before they enter a trade, they will always ask, how much am I risking in this trade? Whereas for beginner traders, they will always ask, so how much money can I make in this trade? Ironically, okay, trading is sometimes a bit strange. The more you focus on the profits, I want to make this amount of money, I want to make this amount of pips, the more you lose money. But then the more you focus on protecting your downside, okay, then the profits will somehow take care of itself. Focus on defensive trading. Defensive trading. Now, defensive doesn't mean you wouldn't experience high growth. Doesn't mean that you wouldn't earn a lot of money. In fact, you earn a lot more money if you practice defensive trading, because that's what the top hedge fund managers in the world do. Protecting capital is #1 priority. The next trading advice, quality over quantity. A lot of beginners, they like to open a lot of trades in one day, but then you realize when you become more experienced, you gradually go to the higher time frames and you make less trades. But when you make that one trade, the pip harvest is a lot more as compared to if you are to scout 20 trades, 30 trades, making a brokerage and making yourself broker. Next trading advice, risk to reward over win rate. A lot of beginners, they like to focus on achieving high win rate. But then the moment they make that one losing trade, it wiped out all their previous profits. Why does that happen? Because they focus so much on achieving a high win rate, they would then take profits early, cut losses late to avoid the loss from ruining their high win rate streak. Whereas if you focus on risk to reward ratio, having a good risk to reward ratio, you wouldn't even care too much if you have a losing trade today, because you know that in the future there's going to be a one big winning trade that is going to cover the losses that you have. But of course, understand your personality. If you prefer high win rate, then you go for a higher win rate strategy. Okay. The next one, now this one is big. Position sizing over trading strategy. So a lot of beginner traders, they focus on trading strategy only. Okay. That's needed. You need that. Okay. You need that. But they completely ignore position sizing. If you want to become a successful trader, master trading strategy, but also put an equal amount of time, if not more time, mastering position sizing, risk management. And you see your trading results change without even changing your trading strategy. And you see a big difference in your trading profits. I have a free risk management position sizing course. I'll put it somewhere on this screen. So with that, subscribe if you don't want to miss out on future trading tips and secrets. I'll talk to you in the next video. Bye.